Good morning, everybody. Why don't I just let the panelists, please, Ross, Jonathan, Pamaki, and Law, please join me on the stage. Thank you. Okay, good morning, everybody. How are you today? I hope you're doing well, and it is indeed an honor for me to be the moderator of the first session today, entitled Identifying Investment Niches within the Truly Diverse Regions of Indonesia. Since this is the first session, I was just thinking maybe I can get the feel of the audience. How many of you are actually owner investors? Can show of hands? Not that many. Well, don't be shy. Okay. How many of you are actually operators? Okay. Good mix. Consultants? All right. Okay, fantastic. Thank you for participating. So I would like to first start with thanking, again, Hospitality Asia for inviting me to be the moderator, putting together this panel and the event. I think it's a really good turnout. I'm so happy for them. Thank you all, but especially thank you all of you for joining us this morning. I know it's a little bit wet out there. It's not easy to get here. Okay, so my name is Rio. I'm currently the Vice President of Development for Accor. I've been in this position for the past 10 years. So for those of you who don't know me, so I have been truly exposed to the immense diversity of the region of Indonesia, for sure. And as you can see from the slide, I'm going to put this slide in here to remind everybody how big Indonesia is, because sometimes we forget how big Indonesia is. Is it okay? Okay, so we have a panel to discuss this important topic for that actually represents a diverse background as well. So we have a hotel investment specialist, advisor, and owner and developers, and also a representative of a well-known, recognized hotel management company. So it's quite diverse. It's not only one. So you can see Indonesia, beautiful Indonesia, huge potential. So the second thing I would like to show before we get to the panel is I came across these latest. I came across this latest figure in the newspaper, which I thought sums up the Indonesian potential for the next 10 to 20 years. There is little doubt in my mind, I hope you agree with me, that Indonesia is going to be one of the most interesting countries to watch in the next decade, for sure, right? So without further ado, let me kick off this session by letting our panelists introduce themselves in a quick 1 to 2 minutes. Opening remarks about themselves, their role in each of their organization, and their current views about investing in Indonesia.
Okay, sorry, Rio, I need to stop you there for a bit. Just so you know, we have 2 concurrent summits going on. Here is Hotel Investment Summit, and then Hotel Design Summit is in the other room. Because I know that there are a lot of designers that who are willing to attend the summit as well. Just so you know.
Okay. Is everybody clear on that? Okay. You're not in the wrong room, are you? Okay. Just to make sure. Okay, why don't we start with you, Jonathan?
Hi everyone. Thanks Rio, and thanks to the organizer for having me again this year. So I'm Jonathan, so I'm heading the investment side for Saigon, basically based out of Hong Kong. So we're investing mainly into residential is a core part of our investment strategy, but mixed use as well. So we are currently invested into Hong Kong, Ho Chi Minh City, Singapore, and Indonesia as well. So for Indonesia, obviously, because of the scale, any residential development is mixed use in nature, which incorporates hospitality. I guess that's why I'm here. Yeah.
Thank you, John. Rob?
Thank you, Pacquiao. Ross Woods is my name, and I want to thank the organisers and all of you for attending this excellent conference. I've been involved in the advisory field for, many, many years. Rio, we both came from Horwath many, many years ago, and I've spent 25 odd years in North America, providing advisory services to hotel investors, developers, banks and REITs. And in more recent times, I've taken up residence here in Indonesia the last 4 years, providing advisory services. And what I wanted to say in relation to the investment outlook, I think it's fair to say, for one who's developed a lot of econometric modelling expertise, that modelling the Indonesian hotel market, whether it be at the national level or at the regional level, provincial or regency or city, is one of the most difficult challenges I've faced professionally. And I'm more than happy to discuss that at some. But I think, our forecasts are looking at 120,000 additional hotel rooms that will be needed by 2028. But clearly there are issues in relation to the level of recovery, and I was interested to hear Xavier's comments in relation to that.
Thank you, Ross. Yes, please, Law.
Hi, I'm Law. I think the bell was a bit distracting. I thought I was over time, but anyway. So hi, I'm Law. So similar to Ross, I've been here for, I think, past 5 years now. So I've been based in Indonesia. So I run development for Ascot. So I think over here, you probably know us better from our acquisition of Tausia, which we have done, did it about 4 or 5 years ago. So now we have about 100 operating properties here. We started off as an owner-operator, actually. Now we are really a pure operator. So we have about 100 operating properties, another 50 in the pipeline. So really, my job here is to drive growth for us in Indonesia and Malaysia. So in terms of where we are present, we are probably a bit, I wouldn't say we're a bit more interesting. We are across the whole spectrum of lodging, all the way from what you could traditionally think as hotel, service apartment, and also senior living even. So in terms of the hotel investment outlook for Indonesia, I think I echo what Rio said. Indonesia is a vast country. I think to generalize the sentiment across the country would be something, would show some in-depth understanding of the market. So really, I think Indonesia is such a vast country with so many differences. There's really different bright spots and different areas where I think we continue to see investment activities and we continue to see growth in.
Thank you, Law. Pak Maki?
Thank you. Good morning. So pleasure to be here. And again, I'm Maki from Tokyu Asia. So currently, I'm a head of project and business development of Tokyu Asia, which is subsidiary from Tokyu Corporation from Japan. So it's clearly and straightforward that basically Tokyu Asia has a clear mandate for expanding the investment around Asia Pacific region. And under Tokyu Group, we have currently 18,000 rooms under management, which is equal around 80 hotel assets across Japan. And I also proud to share that basically just recently we have engaged with notable properties such as Accor, Hyatt, and ISG for our hotel investment in Thailand, Japan, as well as Indonesia. And last but not least, I think we can wait that basically sometimes next year we're going to open our first service apartment project, which is Swiss Hotel Living in Mega Kuningan, and we confidence that it will be robust, excellent, because it will be the first Swiss Hotel Living residence in Indonesia under Accor. And our view for Indonesia is
In Asia,
actually. Wow, awesome. So again, our view for Indonesia is, again, Lau mentioned previously that we see that Indonesia is going to be robust. And we also seen that even this year, for us as investor, market liquidation is really important. So as we probably know that even last year, right, there is 2 notable transactions, which is Mandarin Oriental as well as the other property, right? So for us, it's a good, and we believe that the 2024 outlook will be more pie that can be absorbed on the table for us in the next year. So that's our view. Thank you very much.
Thank you. Thank you, everybody. So with that introduction, opening remarks, I would like to start some questions that I have prepared. However, I would like to say that I would like to make this as interactive as possible. Therefore, if you have any burning question and if you want to react or you want to respond to some of the comments that one of our panelists made, please, by all means, just raise your hand. Let's make it interactive. It's not a very big room here. Yes, please, Pak Julius.
Everybody. Thank you. Into the best of that. From the operator. Well, when you need it, I take it on me. I was already on top. I wonder, I will all die. Stand up at the end.
Every what, sorry? Oh, Airbnb, okay. Okay.
We thought managing something. I'm not managing it. Then we.
Okay.
How you guys, especially how we can handle the stats of combating this is that your hospitality, they are.
Okay. Thank you. So this is the first session of the day. I know enthusiasm is very, very high. Thank you so much for that. By the way, I'm the moderator here, so I'm not sure whether I should be answering that question as a core. But maybe Ascot can answer that, and I can add to that later on, please.
Thank you, Rio, and thank you for the question, Pak Julius. So actually, interesting, we've been asked this time and again because our business is probably what people perceive to as being the most affected. But fortunately, we stood the test of time. In fact, very interestingly, sorry, let me just make sure. Very interestingly, we have a lot of cases where we have Airbnb and our branded property being managed in the same building across Jakarta. I dare say we have about 7 or 8 properties in the arrangement. More often than not, we find ourselves going after very different segments. So the corporate segment is now returning with a vengeance. And the corporate segment, I will put it out there, is going after the branded options. They are not going after the Airbnbs. And that's for a very simple fact that people need consistency in experience. People need to know that they are going in, they're booking a room, that they have a key that will be there, they will have a housekeeper that will show up. So in effect, I think that's where the price, the ADR, and the occupancy reflects. I give an example, shouldn't say which building, somewhere in Kuningan. We have a service apartment, an established service apartment where we have Airbnb competing within the same tower. Our ADR difference, when we compute them to a daily stay basis, goes up to as much as 70 to 80%. That is the difference we are looking at. So in effect, who is staying, the type of customers that we are attracting in the Airbnb and at least in the corporate service apartment space is very different. That's one. Second, in terms of the occupancy, same thing. We have a very steady base of customers. Airbnb, they are normally predominantly leisure travelers, predominantly weekend full, weekdays empty. So this is also reflected in the performance of that two sides of the. And we know that because the condo residents complain to us that we use the facilities more than the other side of the building. So that's something and they ask us to pay more service charge, right? So yeah, so that's something we see. So in all, do we see them as a threat? Not really. We see them more as complementary. They take a market that would have otherwise been unable to afford our accommodation anyway. So we see actually peaceful coexistence with them. We don't see them as necessarily a direct competitor. Would they erode our business? Yes, maybe. Would it be more than 5%? Maybe not. Yeah, I think that's where we will probably.
Right. Thank you, Lo. Ross, do you want to add something? No, you're okay. It's okay. All right. Okay, thank you, Pak Julius. So hopefully that answered that question. I actually have a question that I would like to pose to the panel. With the current hot topic, the imminent election coming to Indonesia, I think everybody's mind is on that. Maybe we can start with Pak Maki. How do you feel? How does your organization feel? Wait and see, business as usual, nothing. Thank you.
Well, thank you very much. So, yeah, I have a few conversations with my colleagues, right? So, predominantly the developer side or investor side will slightly reluctant to give a comment on this because we try to be posturing ourselves as neutral as possible. So that's the idea. But what we think actually, this year election will be might be different from last 25 years. I mean, like, we think that the potential polarization and so on and so forth will be less. And we believe that the government will be still focused on how can I say, increasing their macroeconomic policy, and they will focus also on reforming on the investment climate. So what we see is basically we couldn't say that we on the wait and see status, but we believe that this election also will have an impact on the hospitality sectors. So I believe that some of the consultants say that this year is because the election event, it will be increased 3 to 5% of the room demand and MICE demand. So I think for the hospitality sectors is it's really robust.
Thank you, Pamak. John, do you have anything to add to that?
Yeah, well, I have Taiwanese relatives, so I was brought up not to speak about religion or politics at the table.
Right. Okay.
But I will say that, and that's a good discipline to have. But I would share some observations that the previous two elections were a lot more heated, I feel. This round, I don't think it is more an issue of political risks. Thinking back on Indonesia, we're on the back of 10 years of full speed infrastructure build. So we're kind of getting ready for the economic value capture. So I think politics aside, there's been a lot of business volumes, which is going to drive a lot of the business travel. If you look at tourism travel in Bali, has been quite heated up, but Jakarta is not by any means a tourist destination, I think. I hope no one criticizes me for that. I think it's a great business city, it's a gateway city, so I expect those ADRs and occupancy to reflect that in the coming, well, at least the next 5 years, the next term, whoever wins. Yeah.
Ross, do you have any?
Just briefly, we conducted a study of the impact that elections, both the first election and then the runoff election, what impact it had on occupancies here in Jakarta and in Bali. And it was a fairly detailed statistical analysis, and we came up with that there was no impact. Everyone thinks that that occupancies will fall or they'll increase. Now, this was both for the first round as well as leading into the second round. So I thought that just in terms of historical analysis. Well, I guess it's fair to say that investors, from my perspective, are probably waiting on the outcome, and it'll be a steady approach until we know the direction of the new president. And so I would think that people are probably sitting on their capital, because capital wants to avoid uncertainty. Uncertainty is the great downer for capital, and I suspect for the next 2 or 3 months people will be waiting, depending on whether or not on the 14th of February we have a winner, or we have to wait until the 26th of is it June or July? June.
Right.
Yeah.
Okay. Thank you for that, Ross. So switching gear a little bit, top of mind destination, top of mind market in Indonesia for hotel development for all of you. Just quick answers, which, if you have your own money to spend, which market would you go into? Maybe we'll start with you, Law.
I'm going to be a bit unconventional here. So,
Sure.
And this is reflective of what our owners wanted, where our owners are doing very well, right? Samarinda, Balikpapan, Morowali. I'm pretty sure half the room doesn't know where Morowali is. And maybe to a lesser degree, Padang, but still, Bukit Tinggi, and in general, even Banda Aceh. Yeah.
Okay, so that's interesting. Before I go to the other panelists, you mentioned all basically non-resort destination location market. That's a reflection of the market in Indonesia in general, is it? Yeah.
So it's about the sustainable growth we are seeing in the country, right? So again, across the different cities, we are looking at different levels of growth. Again, it's a vast country, but where at least at the places where we have our operating properties and where our owners are at, we see very, very sustained growth. And again, the hotel game is a bit different here, right? In the sense that owners, unlike in a more institutional setup where you think about, what is my IRR, what is my payback, where domestic investment is concerned, it's about my my break-even point for my investment. And we are witnessing owners who still can achieve some pretty amazing break-even points, also because of the supply situation in these cities. So the demand is growing, the demand growth outpaces the supply growth.
That's interesting. Okay. Pak Maki?
Yeah, I think again, we slightly different from the local. I would say that from the local player, because we predominantly is coming from the investment arm, which is we really require from the local developer to provide really compelling and lucrative proposal for us, right? So I mean, like, I'm in line with law. So when we see and we heard, right? So even again, when we see the report from last year, right? So we can see that 42% the foreign investment, direct investment, even in the hotel industry, right, is basically located in the Java Island. So I mean, like, that's really reflecting the risk appetite of the foreign investor. And it doesn't mean that we don't want to explore another location, another spot, right? It's because basically we really rely on the local partner, and sometimes that the structure and scheme wouldn't be work at the time. So I mean, Jakarta also just issued that, okay, to living decently in Jakarta, right, is required 50 million. So it's a robust. And by saying that, it will be predominantly derived to the non-resort hotel as a spending location. So I think that's our view.
Okay. So I'm going to twist this question a little bit because law answer all these non-resort. For resort destination, John, what would you choose, the top three?
Wow, you really picked the wrong guy.
Yeah.
Let me explain. So if it's whether it's professionally or personal money, to be honest, if it's Indonesia, we've always looked at Greater Jakarta for those reasons that
Right.
was just mentioned. In terms of tourism, which resorts, frankly, I'm a traditional guy. I still go back to Bali.
Right.
But so maybe let me twist it back a little bit. I know the question was on which cities and which areas, but I feel like for Indonesia at the moment, it's more the strategy. So a lot of people try to do private equity strategies here, but it's really difficult because it's complex and stuff like that. But I feel like this cycle, there are some opportunities which are afforded, but of course, there's a separate question in terms of how you look at the cap stack or how to finance these deals, because the days of LBOs are over with what the Fed is doing. And not to mention, of course, the build quality in terms of taking over a operating asset, how you factor in your AEIs and things like that is a separate issue. But I think Perry can be a team in this current cycle. Yeah.
Okay. Thank you, John. Ross, maybe I'll twist it a little bit more for you. Resort and non-resort.
Pac Rio, I really don't want to answer your specific question.
Sure.
For the simple reason that I'd like to spend time with a client talking about what are his or her return expectations.
Sure.
Are they high risk, high return type investors, opportunistic, or are they looking at core investments, essentially low risk, low return? Because the opportunities in the country are plentiful. As I mentioned to you before, we believe that there will be a need for another 120,000 new hotel rooms. These are star-rated hotel rooms by the year 2028. And so clearly I see opportunities in every province, right? If you came to me and said, we are a core investor or a core plus investor or a value add investor, I think there are opportunities across the board.
Wow.
And to sit here and say, look, there's two or three, I mean, I could mention two or three places that I've done some work in the last 12 months, but it's giving a disservice to the people who may have an opportunity. If you have capital and you are a hotel investor or developer, then you need to come to terms with what your expectations are and what sort of tolerance you have for risk. So I'm going to leave it at that.
That is amazing, Ross. I think that proves the fact that, like my first slide, the fact that the next 10 years for Indonesia is going to be. So you're basically confirming what I'm actually going through every day, because we are getting a lot of leads in our core for projects and things like that. It's been quite an amazing 6 months, to be very honest with you. So I guess that's the reflection of what you just said. So that's very interesting. Okay, so what about positioning, Ross? Maybe I'll continue with you. Where is the sweet spot in Indonesia?
Well, I guess, firstly, you've got an economic juggernaut, given your population characteristics. This country is on the verge of enormous growth, provided politically there's stability and we're all in this together. So I just see enormous growth. But in terms of hotels, one of the most profitable hotels worldwide have been 4-star hotels. Why 4-star? Well, I'm talking about good quality 4-star, because in most markets, you'll see 5-star hotels and luxury hotels. They spend a lot more on marketing. They're attempting to create a cutting edge. And I'm often reminded of birds. You see the famous, birds, how they fly. So good quality 4-star hotels can slipstream in behind luxury and 5-star hotels. I've been privileged. I haven't worked for a hotel, haven't worked full-time for hotel management companies, but I've had access to an enormous database over the years, and good quality 4-star hotels worldwide, and I believe in this country as well, probably.
Okay, that's good.
And clearly 3-star as well. Now that's not to say that, essentially in this country, 5-star hotels, a little bit different in Bali, but here in Jakarta, given all the econometric modelling that we've done in relation to Jakarta, we could not define why 5-star hotels and luxury hotels developed until we plopped in our model the development of mixed-use developments, office, retail, and a hotel. It might as well be luxury.
Right.
Because there was no economic drivers that we could determine.
That's another interesting comment, Ross. Thank you. Maybe, Law, you want to add to that?
Yeah, completely agree. I think that's also why, in terms of brand and where our company is at, we are primarily focused at what I call the upscale segment, right? So again, different cities at different level of growth require different type of hotels. But generally speaking, I am very comfortable going to a Samarinda tomorrow, to any secondary tertiary cities across Indonesia and planting a solid upscale hotel. So that's completely in alignment with Ross. And 5-star. I also share his sentiments on 5-star that besides Bali, it's a big question mark. Yeah.
Well, maybe another way of actually looking at that would be like, yes, the 4-star is definitely the sweet spot, but maybe the future will be the upper upscale, right? Maybe, I don't know, because as the economy grows. Any question from the floor? Anything that you? Yes, please. Okay, go ahead. Okay, so the first one is, how do you see hospitality investment opportunities in Riau region, especially Batam? Who wants to take this one?
Sorry, the question again?
Riau. Yes, Capri, yeah. Please, Law.
Okay, I guess I'm taking this question because we signed 7 new projects in Batam in the past 1 year.
Okay,
so across the scale, all the way from mid-scale to upper upscale, so we signed something. So I guess there's a strong, it's underpinned by a very unique demand drivers, right? Batam. It's underpinned by its neighbor Singapore. And again, and it's also underpinned by the strength of the industrial parks in the city. So we do notice that as the city develops, there's a huge push for, again, upscale type of properties. And that's where we are seeing a lot of demand there. So again, and also a lot of the hotels, they are also at a very interesting phase where a lot of the hotels are built about 10 years ago. I think they are approaching the phase where they're either undergoing AEI or they are undergoing rebranding, right? So this is where we notice that a lot of, the demand for the corporate is high. Our friendly competitor, who's the highest rate, I would say the highest rate in city now, they are doing about 1.7, 1.8 ARR. I mean, that was not thought possible before in Batam. So again, that has lifted a lot of confidence in the city. Is that sustainable? I think the development these 2 years will take a while to absorb. After that, the growth will be there, but I think maybe it needs to moderate down a bit in terms of the hotel supply growth. Yeah.
John, are you familiar with Riau? Okay. Ross, do you?
Just briefly, if we look over the last 7 or 8 years in terms of volatility as opposed to growth, I mean, Cape Rio is probably the second most volatile province in terms of star-rated hotels in the country after Bali. So on a risk-adjusted basis, if you're looking at places like that and you think that the past is a precursor to the future, then it's more volatile. So you'd be looking at higher risk, higher return opportunity.
Yes, I know. No, my mic just died. What type of hotel or type of hospitality brand will likely benefit the most? Benefit the most from Indonesia's imminent economic boom? I guess we already sort of went through that. Yeah. I think we went through the sweet spot and the
sweet spot and the actual the markets.
What do you think about senior living in Jakarta, and which location is good?
Who wants to take a stab at that? Yeah.
Related to that, I see one of the great tourism hospitality opportunities in the next 10, 20 years is what I call extended stay, long-term senior living.
Right.
For offshore visitors to come here, not for 1 day, 2 weeks, 3 weeks, but for 3, 6 months. Clearly we need visa and all that sort of thing, but an extended stay senior living facilities,
right,
which everyone talks about high quality tourism. This would be high quality tourism.
Right.
And I just see that as an opportunity. I know it's not related to senior living facilities here.
Right.
For Indonesians, but potentially that type of development.
Or in markets like Bali?
Well, there could well be an opportunity for 5 or 6 of these opportunities in Thailand, Malaysia, Bali, and they're a market I'm reasonably familiar with. But Australians are spending on overseas travel 2 weeks in the Rhine, and they're spending $15,000.
Right.
And there's trips to North America, $25,000, $30,000. And so I think Indonesia's missing out potentially on this extended stay senior living facility.
I know this is a hot topic in Japan, yes. Are you guys thinking about this?
Well, I think Mario has doing his homework. So yes, we have a kind of facility of senior living in Japan, and we're proud to be say that in Japan is quite successfully. However, right, we believe that each country or each region has different mentality barrier. So I don't know if you agree, and it's feels free to disagree with me, but in Indonesia, it's not really common to put your parents outside of your responsibility. Having said that, so it could be better for the investment opportunity as long as it wrap up and packaging with other alternatives. I think we can see in Penang that there is a senior living integrated with the recreational as well as with the hospital and so on and so forth. So I think if we're packaging nicely, it will be also potential for the future development. But this year or upcoming 5 years, it still need to be weighed. That's our view for that.
John,
Yeah, we actually, I'm a little bit on the side of Ross because for Sino-Ocean, we looked at the economics as well as the demographics of it in China many years ago and decided to invest into quite a substantial, large portfolio of senior living facilities. However, there's that cultural aspect that was just mentioned. Which is true, which is true. So perhaps the answer is for the Australian market in Bali, for example, and things like that. I think there's a market. The question is how large, right? And is the juice worth the squeeze? I think that's very important.
Actually, just to add to those comments, I've had experience, personal experience, both in Jakarta and Bali. People asking me about the potential of senior living. So it is out there. It is floating around. But these are, I think, all good comments whereby people are still sort of holding back and saying like, is it gonna work because of that cultural differences? Even one of the things that almost actually get realized is the one that actually focus on Australian Ocean. So this is actually limiting I think the ROI and things like that, because if you're too dependent on one market, then it becomes a little bit problematic for investors.
Real, I think we have a lot of questions.
I know.
Thinking that how about we just scroll down, you can choose like two of them.
I think what I will do is let me just. I think not all of these can be answered. Maybe you can approach the panelists later on after the session. We have about 4 minutes left. Let me just go through it and pick the one that I think might be of interest. Yes, actually, this one about Itan, I had it on my list. Your new on the new capital, investment in the new capital. We start with you.
Long view. Yeah. One sentence answer. Long view. Surely but certain.
Okay. John?
No view. No, I'm kidding. No, I'm kidding. I mean,
So again, my passport's still in Indonesia, so I need to be carefully saying this. So again, I mean, like, we see that IKN can be equalizer, actually, with a few caveats. First thing is, I think, first thing and foremost, right, the government also need to be thinking how to democratizing and also, how can I say, manage airfare rate. Because if this is not managed properly, right, so IKN is just IKN. How that we going forward from A to B and so on and so forth, right? So I think IKN will be rely and dependable on the airfare democratizing. So that's my view.
Ross, quick comment?
2 minutes. Strategic bet on the part of Marriott and developers. Caution, don't race in, but don't leave it too late.
Okay. Yeah, it's jumbling. Okay. Let me see. Hotel franchising in Indonesia, dominated by HMA. Do you see this changing? Anybody? Take this out. Yes.
actually, this is a very good question. I totally see it changing. I think it has changed. And guys like Law, and Bagrio as well. I think it's been very stable in Indonesia, very a Western model, I want to say. When we do hotels in the UK, it's exactly the same. But there is a very specific strategy from North China that's going to come here. How successful it's going to be is a big question mark because that would entail a component of investment along with the management. Obviously, for guys like Ascot and now Sino-Ocean as well, we have all evolved into a asset-light strategy. But there's a need for deployment of capital from North Asia, actually. So Indonesia is right on the radar. I think there's a lot of players coming in already here, and post-elections, there's a whole bunch coming in again. So we'll see how the landscape will be. Yeah.
Okay, thank you. So we have 5 seconds. Or we want to just take a stab at the franchise?
Sure. So I think it has already changed. In fact, all the big operators are already in a way allowing franchise. But in a very strategic manner. Yeah, not all franchise. Yeah.
So we please join me in thanking the fund. I think it was willing to give Thank you.
Thank you very much.